Malaysia's trade is one of the main engines of its economy. From 2020 until 2025, the numbers shift a lot, from pandemic impact to strong rebound. In this short documentary, I will walk through the major trends and what they mean using real data from each year. Overall trade performance 2020 until 2025. In 2020, Malaysia recorded RM1.784 trillion in total trade, a slower year due to global lockdown. In 2021, trade recovered sharply to RM2.228 trillion, and by 2022, Malaysia reached its strongest point at RM2.884 trillion. This peak came from high global demand for electronic and strong commodity prices. In 2023, total trade is to RM2.637 trillion as global market weakened. But 2024 improved again, rising to RM2.879 trillion. For 2025, from January until September, Malaysia already recorded RM2.234 trillion, showing a steady activity. Throughout this year, Malaysia maintained a trade surplus. The highest was RM256 billion in 2022 and RM139 billion in 2024. So overall, the trend showed resilience despite global uncertainties. Domestic export and re-export 2020 until 2035. Domestic export start at RM799 billion in 2020. Then they rise sharply in 2021, reaching RM1.012 trillion. In 2022, domestic export hit their highest point at RM1.222 trillion. After that, they softened slightly in 2023 to RM1.111 trillion, but increased again in 2024, which is RM1.214 trillion. For 2025, January until September, domestic export already reached RM911 billion, showing strong activity throughout the year. Re-export follow a similar pattern, but a smaller scale. They begin at RM185 billion in 2020, then rise to RM299 billion in 2021. In 2022, re-export peaked at RM328 billion. They remain stable at RM318 billion in 2023, and then slightly lower at RM293 billion in 2024. For 2025, January to September, re-export record RM259 billion. So overall, the pattern is clear. Domestic export grow the fastest and form the largest share, while re-export remains steady and support Malaysia's trade network. Both categories show strong recovery after the pandemic and remain consistent through 2024 and 2035. Import, buy and use 2020, Malaysia import RM430 billion worth of intermediate goods. Capital goods reached RM91 billion and consumption goods were RM74 billion. Intermediate goods are clearly the largest group in this year. 2021, all categories increased. Intermediate goods rose to RM546 billion, capital goods went up to RM104 billion, and consumption goods reached RM84 billion. Compared to 2020, each category shows stable and healthy growth. 2022, import activity reached its highest point. Intermediate goods climbed to RM706 billion, capital goods increased to RM120 billion, and consumption goods reached RM104 billion. This year marked the peak before the slowdown in the following year. 2023, intermediate goods dropped to RM620 billion as global demand weakened. However, capital goods continue to grow to RM129 billion and consumption goods stay steady at RM104 billion. Even with the slowdown, Malaysia continued investing in machinery and production capacity. In 2024, import increased again. Intermediate goods rose to RM 749 billion, capital goods jumped to RM 167 billion, and consumption goods reached RM 170 billion. This shows stronger production activity and rising consumption demand. 2025, January to September, intermediate goods total RM 533 billion, capital goods reached RM 160 billion, and consumption goods stand at RM 87 billion. This value shows stable activity for the year so far. Major export sector 2025. Malaysia exports are led by a few key sectors. Largest is electrical and electronic, worth RM 512 billion. It continues to be Malaysia's strongest driver, supplying components used worldwide. Next is energy and petroleum at RM 150 billion, supported by refined petroleum and LNG. Agriculture and palm oil contribute RM 92 billion, reflecting steady global demand. Machinery and industrial equipment follow with RM 58 billion. This sector forms Malaysia's export backbone, with electrical and electron carrying the biggest share. Major import sector 2025. On the import side, Malaysia brings in a significant amount of intermediate goods, including electronic parts, machinery, and chemical. These are essential for Malaysia's manufacturing industry, especially electronic. Malaysia also imports industrial equipment, refined petroleum, chemical, and automotive parts. The patterns show that Malaysia operates within a global production chain, importing key components, processing or assembling them, and exporting higher value products. Major export destination 2025. In 2025, Malaysia's main export destinations are Singapore, which is RM 225.6 billion. We have China, RM 207.4 billion. Then, United States, which is RM 146 billion. Japan, RM 86.2 billion. And Hong Kong, RM 61.5 billion. These destinations are important because they form Malaysia's core demand base. Singapore functions as a major re-export hub. China relies on Malaysian components, and the US remains a strong buyer of electronic and medical products. Major import sources 2025. For import, Malaysia's top sources in 2025 are China, which is RM 260.9 billion, Singapore, RM 175.4 billion, then United States, RM 85.5 billion, Japan, RM 67.8 billion, and we have Taiwan at RM 64.9 billion. China is the largest supplier, especially for electronic and machinery, while Singapore supplies refined fuel and components. For Japan, Taiwan, and the US, they provide high-tech precision equipment. These sources keep Malaysia's industry running, especially sectors that depend on a stable supply chain. ASEAN FTA trade. Trade with ASEAN FTA partners remains strong. Malaysia's major ASEAN partners include Singapore, Thailand, Indonesia, Vietnam, and the Philippines. The FTA reduces tariffs and simplifies cross-border movement, supporting Malaysia's role in regional production network. Malaysia often supplies parts that are later assembled or processed in nearby countries, strengthening ASEAN interconnected supply chain. Export by state 2024. In 2024, export performance by states show a clear strength. Penang leads by a large margin with RM 494.9 billion, driven by semiconductor and electronic manufacturing. Johor follow with Rm 306 billion, supported by industrial zone and petroleum activity. Selangor is next with Rm 265.7 billion, thanks to diversified manufacturing and logistics. Sarawak contribute to Rm 116.6 billion, mainly from petroleum and energy. Other states such as Kedah, Sabah, Pahang, and Malacca add a consistent contribution, while smaller states like Perlis and Kelantan export at a lower level. This shows Malaysia export activity is concentrated in key industrial regions. Forecast future trends in the next 5 years.